Okay. Hey guys.
Hello, welcome back to this channel.
How
Well,
exciting.
oh well,
Okay, cool.
yeah. What are we talking about?
So in today's
Money,
video,
money, money.
oh yeah, money. As
Yeah.
always, money. Couples money.
Yeah.
If you guys new to this channel, we talk about money.
Personal finance, couple finance, marriage, couple,
money. Yeah.
with kids, 2 dependents, 4 and 5.
Living in Sydney, and this is how we go doing things in order for us to receive different source of income.
And retire early.
Yeah.
Yeah, I'm not working, and sometimes you're upset with it.
I know you were like working on what? You haven't been in the office for how long?
Oh, 5 years already, more than 5.
So did you quit or did you get fired?
Take a deep breath. It's a beautiful day today. Okay, what are we talking about today?
Alright. So in today's video, we're going to talk about, I guess, our portfolio, our current portfolio.
Yeah, updates
Yeah.
of our investment
So,
on micro investments.
Micro investment. So
Yes.
particularly Raise and Spaceship.
Comsec? No?
Comsec, we're kind of new
Quite
in
new,
Comsec,
yeah.
so we'll show you what it looked like. We haven't really dived into it as much.
Yeah.
So the idea of it, if you're wondering if you can earn, let's say, $100 per week or $100 per month or whatever it is, we're trying to gain roughly about $1,000 per week. That's the goal.
The goal.
Yeah, the goal is getting a return of $1,000 per week. How long will it take and what type of capital? I don't know. So
Yeah.
this is based on our personal finance. This is on our account. Please be mindful though. This is our account and we're not financial advisor. This is based on our own little experience, experiment. And if you can't afford to lose money, do not invest.
Yeah, just invest in. Well, when you start, invest on any that you have spare. And
Yeah.
when, for example, now we're kind of getting into it, so we try to invest a bit more.
Yeah, and we realize the potential of earning an income from this a lot higher than what we expected.
Yeah, what we.
So,
yeah.
When I first started this, it was only about $15 a day. The concept was simple. If you're able to buy lunch, you should be able to invest because that $15 it's going to able to earn interest from it.
Yes.
It might not sound much, but over time, it will be
Quite a lot,
quite a
substantial.
lot.
Yeah.
So, November 2020, this is where we at.
Yes.
Okay, cool.
We started in end of January,
in January 2020.
just before
So-
pandemic.
Yeah, just before the pandemic, and
Pachong!
it was so scary when you see your account going down.
Like each time, why? Whenever I invested, it's like that.
So, and then I realized based on Raise alone, somebody actually asked me yesterday, how can I earn $100 per week? Well, there's this way. There is a different way without you're physically working, but it requires a lot of capital. I mean, for some it's a lot, for some it's a little, but it's all depending on you. For me, it's like, as long as I make money on it, I don't really
I
care.
think as long as you take action and invest in something. If you don't,
Correct.
If you don't invest, where are you going to spend all the money? Consumer goods.
Yeah, consumer goods, down in value, you're gonna throw that in the bin.
Consumer good, and who's making money? Company. Who's making profit? Investor.
Going back
Yeah.
in a circle. So whereas us, when we spend money, I want to have some sort of interest back. Instead of me paying interest, I want it the other way around. So in today's one, it would be, let's say, looking at Raise. Okay, so Raise account.
Where is this? The price is kind of instant, right?
Yeah, it's right there and then.
Spaceship is only like once a day.
Yeah.
And it's pretty light.
Yeet. Okay. So when the market opened, well, so far alone, we're making roughly about $18. Not much.
Yep.
But over time, it's going to grow and grow and grow. So as a whole, based on $11,000 investment, let's say, a capital of $11,000, $700 of that is actually
Your profit.
my profit. So that's the interest that we've been receiving so far.
Yep. Well, and we did not skip a bit every
No,
week. We
so-
just putting money in, and sometimes when we have spare cash, we just put it in as well.
Correct. So in a month alone, in October month, it is amazing because I can see it on an average like what was it, nearly about $100 a week as soon as you hit about what was it, the $10,000 mark. So between 10 to get it to 11, it's about $100 per week.
Well, but it's just slightly they're doing really well whatever they invested in.
So and the thing is about raise, it's pretty much you're investing on a pool of fund. You don't have control of
whatever they invest in.
Yeah, whatever they invest in. And they're the one actually going to trade instead of you. So some days is good because I don't have to be in front of a computer. It takes the emotional out of it.
You don't have to read about the company news. You don't have to read about the performance, P&L.
Yeah, that's what they get paid to do. Yes, there's a fee involved, but I'm willing to pay that fee because so far the return is actually a lot bigger than the fees.
Yeah.
So this is my account. Well, this is our account. $11,000 and $700 of that is the return.
Pretty good within a year.
Within a year. So $10,000 down, $700 back.
Yeah, just under 10%.
Yeah, under 10%. Apparently, it's about 12% or something like that. So that's raise. So if you look at that alone, if you have $10,000, how much? If you're putting it in the bank, how much do you really actually get from the bank?
1.5% now.
Yeah. So we're receiving roughly about 10.
Is it really worth it to put it in the bank?
But there's a risk involved, obviously. There's bound to be a risk of the
go negative,
the return minus, or sometimes that you don't get any, or if not, in fact, you have to put more money in.
But well, historically, it just bounce back. Yes, market go up and down, but when it's down, just buy more.
That's right. And then the next one now we've got we also have spaceship. So we got 700 on raise. So in my account alone, I put down $2,000 investment. Apparently, I'm making about $600 return. So that.
Well, your account stopped reinvesting for some time because it changed to my name.
Correct.
Anyway, we combine account for this one.
So on my one, no capital added anymore. So far, about $600 of that is the return as of the same time in January when we first started. So that's mine. There you go. So $2,400 and $600 is the return. So $2,600 is the part.
2,000. Okay. Yeah.
24.
And then since I think in February or March, and then change it to my name. I use my personal name to open another account to put a bit more money in there. There's my account. Ta-da!
19,000.
That's the biggest. Yeah. 19,000 is the investment balance, and we turn 16. It's quite a lot.
1,600 is the return.
Yeah.
So as a whole, would be like about 25 or something. 20. About 20 grand.
22.
Yeah, 22,000, and the return is about under 2,000.
So 10%.
So 10% return.
Yeah.
So where can you get 10% without you physically doing much of it?
And we are not thinking to take out the money anytime soon.
Yeah.
In
fact, it's the other way around.
Yes.
We're adding
more and more
every week.
And then CommSec.
CommSec.
Sorry, we have so many. We just want to compare all this. Which one is better and diversify the money.
Correct.
In case one.
The concept of it is if you have multiple stream of income, and if one of them fall over, that's okay. There is the rest of them that will follow that can cover it.
Yeah.
And that's how I look at it. I mean, you don't have a lot of capital required. I mean, $20,000 is equivalent to a brand new car in a sense. So we also invested on CommSec Pocket.
This was just recently. Last month.
Last month, yeah.
Last month. Well, because I think CommSec is, the biggest bank in Australia. Yeah. And also, they invest in actual ETFs.
Correct.
Proper one. They're more expensive. But when you have more capital, we did a calculation. If you invest in between $1,000 to $10,000, it's worth it per trade for your brokerage.
Because every time you put it in, there's a brokerage fee. There's a fee.
Yes.
So if you have less than $1,000 capital, probably not a good idea going on CommSec. No. So if you have CommSec is probably a little bit more.
You require a little bit more. 1,000 to 10,000 is ideal. So
October, when we started opening up CommSec, now with the CommSec, there's about 1, 2, 3, 4, 5, 6, 7. 7 different products that they have. I put every single one over 1,000.
And I was like, don't do it. And he said, just do it. Okay.
The reason why I put down $1,000 on each account is that way you guys can see it. Which one is performing, which one is not.
So which one is performing?
Sustainability so far is minus.
You don't have to put your own money to see if they're performing anyway.
Exactly.
Anyway.
And then after that, emerging markets in our account alone is plus 3%. Global 100 is plus 0.10%, 0.1%, sorry. Aussie 200 is plus 5%. Health-wise is minus 1.3%. Tech savvy is minus 1.3%. And then Aussie dividends is plus 7%.
What? Plus 7% on them. Wow. So remember last night or so, 2 nights ago, we were thinking, okay, we're going to put some more money in CommSec. Which one should we put it in? There were 7 of them.
There's 7 of them.
So what do?
We put down on tech savvy as well.
Have you put it in already?
Yeah, it's already in.
That's quick.
And sustainability leaders.
Yeah, because we just did some quick research.
With
not just putting everything in, okay, this time.
So this time we did so we had like, okay then, so we have to split our portfolio and we have to put more money in. So at the time that we having a decision, we have $2,000 that we have to put it in somewhere in CommSec. So that's what our decision somehow. So the $2,000, where are we going to put this?
How do we based on what strategy or our research? Do you remember how do we do that?
We went to an overview on every single one of them. And we looked at it in the bottom, in the overview of it, and it tells you how many percent in return.
Oh yeah, historically.
So, for example, if you go to sustainability leaders and if you go to fund overview, it would actually tells you in the very bottom on historically performance and
pretty good.
Yeah, you're looking at last year. It's apparently 21% return on this particular product, and second year 23, and last 3 years is about 20%. So it's 20% average, let's say.
Yeah.
Average.
And I do like sustainability because they're just more ethical, and I think that's the world should go.
And then the other one that we decided on, and we put down $1,000 on that account, and the other one would be on tech savvy.
Is Nasdaq.
And in the tech savvy, it's the same thing. On the previous years and last year's apparently plus 36%. Second year is 28%, and the last 3 years is 25%.
So once we saw all in.
So and we were only looking at 10% return. Anything above that is a bonus. And that's the reason why we decided to put it down in here. However, at the current stage, both of them is in a minus.
Are they?
Yeah, so at the moment, tech savvy is minus 1.3%.
Because you just bought it?
Yeah, and then the sustainability is minus 0.4%.
Yeah, it's okay.
So, where some people, in the beginning, if it's going on a minus, I go panic, why would I want to go there? But now you look at it, when you go to the shops, when you see something on a discount, you should buy more. Instead of just, one packet of whatever it is that is on discount. I'd rather buy 2, 3, 4, 5, and that's how we look at it. And when it's on special, you buy more. When it's on the highest peak, well, you buy at the retail price.
Yeah, the thing is, what's the historical price, so you should go back there or even go higher. So when it's cheap, you should buy more. Yeah,
and we're not looking at to cash this out again for 10 plus years. And if we can, we put some more in, and more in, and more in. And hopefully...
we can be a millionaire one day.
So this is our journey, by the way. So, yeah, this is our journey in order to achieve financial freedom, have $1 million in the bank, well, anywhere, everywhere, with all the little...
asset.
Yeah.
Net worth. All right.
So hopefully this will help you guys out.
Keep you guys posted.
Keep you guys posted.
Update.
So as a whole,
we're thinking to put a bit more money each week now.
Yeah. As a whole now, in CommSec Pocket, we've got about just under $9,000 with a return of under 1.3% in a month.
That's pretty good. Wow.
So out of our whole entire portfolio,
That's good. That's our target. 10% a year. That's what we want.
Yeah. So I'm receiving nearly 1.5% in a month. So if we have 1% a month consistently, we're gonna receive at least about 12% per year.
And our current strategy of putting money in these 3 platforms has changed.
Correct.
So we're trying to even it out. We don't want to because Spaceship's been doing so well, so
Spaceship
we
is
don't
good.
just want to put too much money in there. We're thinking to kind of even it out. We plan to have $1,000 to invest in these 3 every week.
Correct.
So we're doing $350 in Spaceship.
Yeah.
$50
Per
also
day.
$350
Yeah.
in rice, and then Comsec is about 1,000. Was that 1,000?
1,000.
2,000?
Well, it has to be reach up to $1,000.
Yes,
so
because to make
because we only got $1,000 to play with.
Yeah.
It's about $350-ish, somewhere around there, $300-400 each component.
It's about 3 to 4 weeks. Then we will invest in
Correct,
Comsec.
in Comsec.
Okay.
So hopefully this gives you guys an overview on our, I guess, micro investment. Anything that I can touch on a phone. If you are starting your journey on, I guess, trying to invest. I mean, this is a big numbers for some. I mean,
we started small. We started really small.
And if you think it is, I guess, really useful, I mean, write a comment, thumbs up, like this video. It will help us a lot.
Thank you.
Talk to you guys on the next video.
Bye bye.